Thank you. Thank you. All right. So today's lesson is on liquidity. Liquidity is important because it helps you identify which direction the market is going. So what is liquidity? Let's start this off. All right. Liquidity refers to the ease in which asset can be bought or sold without causing significant price change. So what you want to find is stocks to trade if you're trading stocks with high liquidity. High liquidity means that there are a lot of buyers and sellers, resulting in a smooth price movement, and vice versa. Low liquidity, there's few buyers, few sellers, and that results in erratic price changes. So market liquidity is important because it impacts how quickly you can open and close positions. It's generally associated with less risk because you can get rid of your contracts quickly. So if you're trading something like SPY or Microsoft, Apple, you can sell the contracts usually at the price that it shows without having too much of a spread difference. So I think liquidity is important because it helps you, it can give you the ability to foresee where price is going to move based on the hidden forces of liquidity. So let me give you some examples. Let's see. Let's take ES for example right here. So this ES currently, this is the delayed version, so this is 10 minutes behind, but right now it looks like we're kind of pushing up. So the things that people trade associated to liquidity, the most common ones, let me just list them out. The most common liquidity that people trade on their charts are equal highs and equal lows. Let's just list them. So equal highs and equal lows. And another one is trend lines or channels. Another one would be support resistance, or supply and demand. We have the daily candles. So that would mean the session or the highs, the lows, and the open and close. So when you're developing your strategy, you have to figure out which one of these liquidity areas that you trade. I think it's important to find out which one it is so you can improve your strategy that based around this. Trend lines. And let's just say order blocks, and Fibonacci levels. So these are just a few. There's probably more, but I just want to give you the basic fundamentals of liquidity areas. So on this chart, let's try to find let's just try to find several of these and see how price is impacted in those areas. So if we want to find equal highs and equal lows, let's just say we have equal lows right here. Let's say we have equal highs right here. And even equal lows, we can even do equal lows right here too. This is like a support and resistance just based off of the equal highs and equal low levels. And once the areas are broken, you can see that there's some continuation. So this is one way of doing it. Let's see trend lines and support channels. So do we have a trend line here? We have a trend line here. There's also another trend line, like we could do one like right here. This is another liquidity area. Support resistance. Let's do let's just make this one the equal lows right here. So the equal lows, we have trend lines. And let's say we got the equal highs somewhere, equal highs. And order blocks. Where do we see an order block? Because we broke structure right here and we created a fair value gap. This is an order block. And Fibonacci levels. So if we were going to get calls from this range to this range, let's say this range to this high, you want to get it below 50% for the discount in order to take us to our profit target up here. So you want to get calls right here when you see some type of equal lows again being respected, and we push up right this trend line, our target is here. So out of these examples right here, I'm just giving you a visual example of how these are liquidity areas, and there's more than one way of trading it. So if you want to trade support resistance, you would play like rejections, double tops or wicks rejections, or breakouts where we have a support and it's finally broken. Trend lines is pretty obvious. Channels or trend lines, we have a channel up here, we break it, you enter and you look for support for it to rest, to go to. Order blocks, the same thing. You want to see price return to order blocks or fair value gaps in order to see the rejections or the breakouts of these types of support resistance areas. And the Fibonacci levels right here, the 618, where we see there's a consolidation to get calls. Is there a question? I see a hand up. Elena, is that you?
Yep, that's me. I have a question.
Okay.
So can you explain when people say, oh, we're taking out liquidity, or that move was to take out liquidity, like what does that mean with these, setups?
Okay, good question. So liquidity is swing highs and swing lows, basically, because every candle has liquidity. So we have these candles right here. In order for price to move up, it has to take out some type of sell side liquidity. So if we have a liquidity right here and it touches, now that will propel the price to go up to look for buy side liquidity somewhere like right here. So we look for liquidity be taken out, as in order, once you see a touch, not a higher or low, but a touch, then now you would look for buy side. This is sell side. So this is sell side. Once we take out buy side liquidity, now we go for sell side liquidity. So that's the structure. You take out buy side, you look for sell side. And that's why trend lines are a bunch of sell side, because we have one here, one here. So that's why when a trend line breaks, you want it to end up taking out the sell side liquidity, and it does. But that's why you have to use it in conjunction with where the market is going. If we're in an uptrend, then you wouldn't be holding puts for very long. If we're in a downtrend, then you would hold it to its full target. Does that make sense?
Oh, so pretty much what you're saying is that when you were seeing even the equal highs, equal lows, or anytime you have that wick is pretty much open orders, and you're saying that it's going to continue to go up, stay in a trend, but then it has to come back down to fill those orders to kind of have that solid candle to then move back up.
Yeah, if you want liquidity to go, if you want the price to be continuing down, the highest way of doing it is for price to touch it. So once price is touching it, that's why a double top is a thing, where it has a double top where we hit the top and we take out the target and we come down. Double bottom's the same thing. This is a double bottom right here. And once we touch it, now we look for buy side liquidity, which is right here. Does that make sense? So that's what helps you. But if there's fair value gaps in between, then this buy side liquidity is going to have resistance. So until we break above this the zone or whatever you use, or the, oops, it's right here. Until we break above this fair value gap, then this buy side liquidity is a target. But that is generally how price is propelled in one direction or the other. You want to see a wick touch another wick in order for it to come down. So here's another example. We have a wick and we touch it. Now we go for sell side, which is sell side is this one and then this one. But the reason why we didn't go further down is because we have this imbalance, which is a fair value gap that holds it. And once it's broken, then we can look to take out the sell side liquidity down here. But until then we'll have the internal. See, this is called external and internal. So let's say this is external up here. And we have external right here for this range. So any other wicks right here are internal. So they will be taking each other out. And once we start giving ourselves some type of reason for it to go up, then we know that the bigger draw is to take out here, because we're no longer pushing down below the support level over here, and we're breaking out of this resistance earlier. Does that make sense? And nothing is perfect.
So in a sense,
what happened?
I'm sorry. So in a sense, you could look at a wick as being liquidity. The
Yes.
wick is actually the liquidity.
Yes.
Okay.
So if we have a candle, right here. We have a candle right here. We'll just make this 80. Yeah, we have like, so we have a candle right here. That means that once that this is touched, that's why a lot of the times you'll see a candle, let's say a 3-bar, for example. So I'll just do a 3-bar real quick. Right here to here. We'll do it here to here. You'll see a candle do this, and we'll take out the highs right here. So now the pressure can come down. So you get what I'm saying? So in order for the price to come down, you want to see so the liquidity doesn't have to be arranged to like over here and over here. It could be right next to each other. So if you see a candle right next to each other, you'll notice that when one candle is higher or lower, depending on what it is, if it's at the top and the one's higher than the other, and you could see price push down after. Just like right here, this is vice versa. We see how it takes out liquidity right here, the very next candle. Right here, it takes it out. So now it pushes price up into some type of resistance, whether in the form of a fair value gap. If there's no fair value gap, then the target would be to take out the wicks that were not covered up here. So that's the basic understanding of liquidity and how to forecast which way the candles are going to go. All right, so let me see. Another thing about liquidity is that liquidity, that's the candlestick liquidity, but in terms of liquidity with the actual shares, we can take a look at, this is Microsoft right here. This is Microsoft. Oops. And let's say this Friday expiration, right? We see if you look at the contracts, when you're purchasing contracts, it's important to see which one are the most liquid in terms of the options contracts. So for example, if you see a 322, you'll see that the open interest, which means how many people are actually holding it. This is how many people are trading it. And this is how many people are actually holding it. So holding it to the end of the day and swinging it, or the position is still open. So that's what open interest is. So if you look at the 322, it is not as strong as 325s or 330s. So you want to see the fives and the whole or even numbers and whole numbers. You don't want to see that 327.50. So let's say we got 325 right here. It's 10,000. But if you go to the 327.5, that's a random, it's in between. This is 3,000. You see how the difference is? So it's important to see which the open interest is. All of these are pretty high, so you could still buy and sell these easily. But if you look at the 330, that's a whole round number. We got 14,000 people holding this. So it's important to see which the contract is and not to just buy. If it's 320.78, you know, it might be better to even buy the one above the one that's closer, if that makes sense. Just because you want to make sure that you have high volume and you have high open interest. So this is another way of seeing if a stock is liquid in terms of the actual shares or the options contracts. But not only, and you see how it translates over to the shares. But let me just show you Chewy, for example. Chewy, this is not as liquid. So for trading Chewy, Friday expirations, what is this, $30? Let's go to the current price. Let's go to the 31. Oops. 31. You see there's only 112. We go to 32, there's 280. So even though it's further away, you see that the open interest is higher and the volume is higher. But what does it mean to have 200 or very little open interest versus the 14,000 and the 2,000, 3,000 that you see with Microsoft? Well, let's take side by side. We have Chewy right here. We have the Chewy stocks and the Microsoft on the 5 minutes. They look very similar, but if you go look at Microsoft on the 1 minute, because this is a liquid stock, you actually see the candles still. But if you take this and you put it to the 1 minute, this is what I talk about when this is what I mean when I'm saying that the stocks are erratic and volatile. You can't really buy and sell these. You have to do a whole number, and the price has to hit that number before you can actually sell your contracts or your shares. Does that make sense? So you want to find stocks that are tradable. So sometimes you might see something that's cheap that went up 100%, but you want to look at the stocks with volume so you can make sure you could sell those contracts once you get to your profit target. Okay. So another thing too I want to cover is how I use the liquidity to do my AMD trade this week. So if you guys follow me on the Discord, let me just pull up my channel. Okay. All right. So my game plan last week or last Wednesday was I said the semiconductor ETF, SOXX. You could also look at XOXL leverage. But basically I said we had a trend line, a liquidity area that was broken. So RSI moving down, volume picking up. So my premise or my hypothesis is that whatever is in this ETF, which is NVIDIA, Intel, AMD, is that we're going to push down a little bit. So if we push down, where's liquidity that we want to take out? We have liquidity here, we have liquidity here, and we had liquidity a little lower, right? But I said 738, I think this is 705. And so the draw on liquidity to the downside, because we swept buy side liquidity up here, we took it out. So now we look for targets to the downside. We took this one out, we took this one out. All right, we're in this fair value gap that looks like we're going to break. So I said, if price moves up to 112.40, I'll be looking for actionable signals such as red 2 ups, evening stars to take us back down. The target would be the 108.79, which is this first liquidity. And then targets below 107.38, 107.05. So let's take a look at AMD. So on the hourly, this is what I saw. There was a fair value gap here, which is the 1205 that I was mentioning, or 1240 I was mentioning, but we ran through it. We disrespected this fair value gap, but I had another one right here. That we ran into. So the game plan was that I'm not going to trade anything unless we get a red 2 up. So on the 30 minutes, we get this huge candle that disrespects this fair value gap, so I could take this out. But we have another fair value gap right here that I had. And until I get a red 2 up, which this is a red 2 up, all right, a red 2 up. And my confluences show me that, hey, we're oversold. We got a red 2 up. Take a look at the 15 minutes now. This is the 2-2 reversal. We're way oversold or overbought. So this is where I entered for puts. And the target is where's liquidity? We have this liquidity right here. First and foremost, we want to take out liquidity. Let's do red. And then the second one would be the gap fill right here. And then the next one would be the 108.38 that I was, or 108.78 that I was talking about. So price eventually came down, and we never filled this one, but we came down, showing that we're in a downtrend, and the biggest draw is to this 108 level. And what did I say? It was 107.38, or it was 107.38. 107.38 right here. 107.38. Because we rejected fair value gap or whatever resistance that you had. This is also a liquidity. That's why a 2-2 reversal is a liquidity sweep. You see this? We swept liquidity right here and we reject it. So that is another sign why we're going to push down. That's why I said red 2 up. If it was a green 2 up, it would have a different, it would mean something different, but a red 2 up means that we opened, pushed, and failed, and we came down here. And once we break below 50% of this candle, especially on a bigger time frame, and close, then it would be a lot easier for you to stay into this trade. So let's say if you're entering on this 55th break, for example, instead of this 2-2 reversal, your stop loss would just be the range high with a swing low to your target. And until we get back up there, we're exiting. Okay, but I don't want to get too much into a strat class. I can do that in a week or so. The main goal is to take out liquidity because we took out buy side liquidity. So the next day, we gap down and we hit the 107.38. Okay, does that make sense? How we look for sell side liquidity after we see buy side liquidity taken out, but you get your overall hypothesis off of a bigger time frame. So we have this liquidity right here, and we came down. We never took it out. So the draw is still to the upside, even though we're consolidating down here. So we have some type of support area down here, support area down here. We sweep liquidity and we come up, and look, before we can come right back down, we have to take out liquidity. So the idea is to build your market structure, but understand that once liquidity is taken out, you can look for it to go and take out sell side liquidity to the downside, trend line, or whatever the case may be. Trend lines to take you to your target, which would be this one. Any questions? Questions? So it's up to you guys to figure out which strategy or which how you want to find your liquidity areas. The most basic one that I think that everybody should start with is, let's just take NQ, is to do zones. So if you see a low, like right here, a zone, let's just try to draw one. If we see a low like right here to here, this is the best way to start, because if we break the zone, now you want to see how we react. If there's no follow through, then we're going to come up and we look for the bigger draw to the upside. Okay, so this is just the regular support resistance. And once we break this area, all right, now it's treated as resistance, and that's the best way to do it. But at the bottom, at the top of every trend, you want to take a look at how, if we take out, if you see these wicks and then you see one that is lower than the other one, then you could play trend lines. But until we take out liquidity in one form or the other, then we're going to still keep pushing down. Let me see. Do you guys want me to show you more examples of how to use these liquidity? Where I put the labels? All right, let's just try to find a couple more examples of liquidity. So we'll just go randomly right here. Let's just replay it to right here. So from this assessment, we are in a downtrend. We did take out some type of liquidity to the downside, so let's just mark out some liquidities. We took this out right here. That's why we pushed up. So let's put this right here. We like to just create ranges first. I just jump to a random time. So we want to let structure kind of develop, because right now this is internal liquidity. And this internal liquidity does have some type of fair value gap here, resistance. So if we do reject this and come down, then we have liquidity to the downside. We have a lot of liquidity to the downside if we come down. Well, let's see. We're in a fair value gap right here. If we follow through, where's price gone? We're taking out liquidity here. That's why if you're in the middle of a range, it's also important to kind of wait to see what the structure is. Are we going to make higher highs, higher lows? So it looks like, yeah, the draw on liquidity is to the upside. Let's see. What time is this? 19. This is after hours. Yeah, this is after hours. Okay. So now we took out buy side liquidity. So let's see if we want to take out all this liquidity that slowly came up. You see that? So at this, once we took out this buy side liquidity, don't be faked out by these breakouts, right? Because we got left with a bunch of liquidity to the downside. We have liquidity here, this swing low, we have liquidity right here. And if they're right next to each other, it's going to take them all out. If they're right next to them, they're going to take them all out. And the last one was what, right here? And you see how price came back up once we took out this liquidity right here? So that's why it's important to draw your range. And if it's in the middle, you don't want to trade anything unless we got like a big drop, and then you can use a fair value gap or something to bring you back down. Like right here, for example. No. Right. So
before you get off this example, right, when would you have gotten in? Would you have gotten in when it did that double top or triple top on the top of your range?
Well, we had a market structure shift right here. Right here. This is the market structure shift, right? So we came up and then
we made a lower low. Okay, so
this is a higher low, higher low, higher low, and then we made our first lower low. So
yes.
I'll be looking for an opportunity to get short. And
yes.
So this would be it would be through this order block, like I said earlier, or a fair value gap. So we have a fair value gap right here, and then the order block up here.
What's an order block? Like, what are you doing? Let me see.
Okay, let me just remove this. So an order block is basically when you have a market.
It's a market structure change, right?
No, the order block is part of the market structure. So this is a higher high, and then this is called a breaker structure. So we break. This is the structure that's broken. So we made a new higher high. So that's a breaker structure. So at the bottom of this breaker structure is the order block. So this is the order block down here. And it's an order block if you have a fair value gap. So there's a fair value gap here, and there's a fair value gap here. You see? So there's a fair value gap here.
Is there something else I can help with?
There's a fair value gap here. So the order block is just the candles above the fair value gap that created the market structure shift. So in reality, this is, yeah, we had the market structure shift. So the order block would be up here actually, right? But we have fair value gaps right here that take us down. I don't want to confuse you guys. So basically, yeah, the order block is basically these swing lows.
So even so how about when you're right there? Okay, right when you're go a little bit to the right there. Okay, you see all those two big impulse candles to the downside that made that new swing low.
Yeah.
Would that also be considered like an order block down there? Not there, but to the right.
You're talking about this, right? And this.
No, not there. I'm talking about the actual real candle, not the yellow
Oh.
line. But like if you are like if you go, oh no, too far. Go back to where you were. Go back to where you were. Okay, right there. Yes, right there. Yeah, right there. So would that be considered an order block? Because I see a fair value gap
Mm-hmm.
and I see that breaker structure. Is that considered an order block? It's 3 candles, right?
It doesn't have to be 3 candles. It could be 2 candles. All right.
Make a fair value gap. Okay.
Yeah, so it could be here. But this is the yeah, it did break the structure. But let me try to find a better example. Let me try to find a better.
Yeah, because I'm just trying to figure out how to identify it.
Okay. All right, uptrend. Okay. This would be an order. Do we have an order? Let me just do the hourly because the 5 minutes is too small. Okay. Okay. So we break structure here, right? And this is the candles that started it, and there's a fair value gap. So this would be the order block. For example, you see how, and then I'll look at right here. You see how it was respected at the order block? Right here.
Wait, why is it an order block? Hold on, what you were making a lower, so let me see, lower.
So in order to
Lower
be order
lows,
block,
lower
it
lows.
is it's the candle that starts right here, and you break structure. So we break structure right here, and we get, and then it has to create a fair value gap. So we have fair value gap right here. Okay. So this makes it the order block. And every time you break a new high and you create a fair value gap, then there's another order block. So right here, right, we have fair value gap created. We break structure right here. So this is an order block right here. But this is liquidity class. This is just one example of how you can create your support and resistance, because this is the same way you can make a supply zone or a demand zone, right? You do it in bigger time frames, and that's how you create support and demand zones. It's usually at the top. It's the 2 candle structure or three candle structure, whatever the case may be, that leads to imbalance and aggressive move in either direction. Make sense, Melina?
Okay, yep, thank you.
Okay, so basically every time you see a break of structure, right here, for example, we had the structure right here. We had this structure, and then we created a fair value gap. This is the order block. It's this pivot. It's the pivot that created the fair value gap. So this is the order block. So when price comes up, you want to see how it reacts. Does it make a double top, or does it break through and make it a resistance, now support? Okay. But going back to the liquidity, yeah. So I think that as you guys are building your strategy, I think it's important to understand, have we taken out the sell side liquidity yet? And have we taken out the buy side liquidity? Something like this, which is extremely, I think might be some type of news. But if it does something like this, you want to make sure it breaks out of this inside. So this is probably some type of inside bar over here. So, but once we take out a sell side liquidity, we're going to move up. Once we take a buy side liquidity, we're going to move down. So right here, there's indecision. There's no reason to trade. So find how you, what or which of the 6 or 7 that I listed. Let me just list them one more time. Right here. All right. Once you find what these liquidity levels are and which ones make sense to you, then you can trade based off of how the price is reacting once it takes out liquidity. Okay. So equal highs again. All right, we have equal highs over here where you see some type of consolidation. This is some type of equal highs, or equal lows, which is vice versa. Something like this. We have equal lows. So Mileno, right now, what is your do you use any of these?
So I guess I do use a majority of them, but I guess I didn't call it as liquidity. So that's why it's kind of like, there's like all this terminology.
Mhm.
But yeah, when I think of equal highs, equal lows, I always look at those as tweezer top, tweezer bottoms. Am I like thinking of the same thing or?
Yeah, that counts because every candle has a bunch of candles inside, no matter what. If it's a daily candle, there's like a bunch of them. There's hourly, there's 61-minute candles in there. And but the main takeaway from it is that if we get a liquidity sweep like this, then it would give you more confidence to go the other way. I think there was a little bit of consolidation on Friday. I think that was like on SPY. There was a lot of consolidation here, so there was really nothing that could have been. I mean, you could trade the equal highs right here. Once you see an equal high like here taken out and then market structure shift and then a fair value gap right here, that could have been the play. But everything else was not as clear because we were not taking out any liquidity after that. So if you want to take a look, if we don't take out liquidity here, and if we don't take out liquidity here, and if we don't take out liquidity here or here, what we kind of do right here? No, we don't. So what does that mean when liquidity is not getting taken out on the top or the bottom? You guys recognize a pattern? All right, we can even do it too right here. Or we can do it, and we can do it over here too. Not so much. All right, so if liquidity is not taking out on either side, then it's tightening, right? And it creates some type of pennant. When we get some type of pennant, then you want to wait. So all this other stuff right here is just chop. You want to wait until we get some liquidity being taken out. And the only way for liquidity to continue is if we get an impulse candle. Because if we just get a wick at liquidity, then look for it to reverse. But if we get candles to actually follow through, we want to look for different things to give you confirmation, whether that be indicators, whether it be just looking at volume or just looking at the size of the candle. But there really was not any opportunities other than the first 3 hours of the day yesterday or on Friday. So it's important to find out what your support resistance levels are in the bigger time frame. If you see on SPY, we were at support the whole time. So there really was no opportunities to trade depending on what your support resistance are. But for mine, we were at support and we weren't following through down, we weren't following through up. Okay, but we did take out this liquidity, and then we did take out this liquidity right here, and we did take out this one. So if we follow through, that would break support. But since we didn't, I think the bigger draw going into Monday is that we can make our way back up. So that's what I'm thinking right now. This is futures right now. We swept liquidity on the downside. We swept liquidity, had this, and every time you have a support resistance levels, right? Understand that this happens a lot at support resistance levels where you think it's gonna get followed through, right? Support, and then we finally break, and then it reverses on you. It leaves a lot of liquidity to the upside. So we have one here that's not touched, here's not touched, here's not touched, here's not touched. So if you take them all out, it's called a PMG. You take them all as a PMG. That's why these are liquidity PMG. The strat is candle patterns to take out liquidity. A 3-bar means we took out liquidity to the upside and the downside. A 2-bar is that we took out liquidity to the downside, and how much we follow through depends on the next candle or if we have volume. So let's see. So what I think is going to happen, since we've been on we're still on a big downtrend, right? The draw on liquidity. Let's try to get our assessment. This is SPX futures. This forecast basically is like ES. It lets you know what the market's gonna do. Oops. So right now we hit discount, which means we're below 50%, which means you can get calls. We could reverse at this area. All right, we have this 4 hour, or we're at this 4 hour. fair value gap, which we're holding. And yeah, if we bounce, we have a lot of liquidity to take out to the upside. We just have to get through a couple of these resistance that I have marked out. I had this fair value gap that was totally just ran through, disrespected. So we have this one now. So if we can get up here and hold, then we can go take out buy side liquidity because we have targets to the upside. So that's basically how you build your market structure, is by just seeing which areas we're taking out and which way we're trending. And these fair value gaps let me know if it's gonna make a lower high or a higher high. Okay. So anybody want to look at any stocks, and we can kind of see where we're at. But right now, I think yeah, the bigger draw is to the upside for SPY, at least on Monday. I don't know if there's any news or anything. I gotta go check back with it. But right now, it looks like we're pushing up. We see futures is up 0.15%. So it's looking like it's holding this 4-hour support. So I was bearish all last week just because I wanted to see us come down, and we did run into some type of support right here, and we are on discount. So, but the reason why I was bearish last week is if you want to look at the weekly, we took out some liquidity. We took out this one right here. We took out this weekly liquidity. What is this? What is going on? Okay. We took out this weekly liquidity, and we created this huge red candle, this impulse candle, which was also at this daily. We're at some daily fair value gap, which is a resistance. So that's why I'm like on the bigger time frame. I think I want us to come right back down, but on Monday, because we're holding a 4-hour support, I think we can kind of come back and make a lower high. It's still a downtrend until we can break above up here. So everything's this huge structure is still a downtrend until we can make a new higher high. Everything in here, like I mentioned before, is internal liquidity. We have this right here, and then we had this right here, and we took them both out with this one wick and came down. So do you guys see the same thing, or?
I don't know, from what I'm looking at, I'm just looking at that. I mean, I guess there's that big long wick, but I'm just seeing a downtrend, you know what I mean? Because I'm literally looking at a channel. If I did a trend line from the top all the way down to the bottom, excluding the wicks, we need to break above that big
we have to make
line.
a new higher high in order for it, and then we look for a higher low. But right now, these are all lower lows. These are all lower highs, and this liquidity swap just pushed us further down. So we have a bunch of liquidity right here to be taken out. That's why we're at the support, but there's no real fair value gaps below here. So I think that if we break down here, we're gonna really push down and just make equal lows.
Hey, do we have any gaps that we're trying to fill?
Gaps.
I think we didn't really fully close that SPY gap.
We have
close,
a lot of
but I don't
gaps
think
to
it's
fill.
filled.
We have, if you look at the daily candles, it's like I said, that's another way of liquidity, right? There's 4 liquidities in one candle: the highs, the open, the close, and the lows. Yeah, we have a lot of gaps to fill to the downside. What I was saying is that because of every pullback that we had, if you look, right, we swept liquidity right here on this daily, and then we made a high, and we made a new first higher high right here, but the pullback was $37. Right, and we had another one right here where we had this pullback, which was $35, $36. And then when we were in this downtrend, our pullbacks, let's see this pullback. This one was $40. And then this pullback was $37. So what I was saying is that from our highs to our lows, right, if we go $37, that means we could fill this gap at 421. So it's not unusual for price to drop this much, and it'll still be an uptrend. It'll just be a pullback, and we have gaps to fill to the downside. So I was looking at this being that like, because we got these super bearish candles, we're at support. If we break the support, yeah, we have a lot of gaps to fill to the downside, especially tech looking super weak. I have a Meta having like a million gaps to fill because we were just gapping up every single day. We have a gap here that wasn't filled. You see these two wicks that were not touched. They didn't touch. So we have gap here. So we have a lot of gaps to fill to the downside. I think if we do push down, yeah, I could see Meta dropping like another like $25 or something. $20. So that's just my assessment. For tech looks a lot weaker than SPY, I think, mainly because there was some type of sector rotation. You know, I think banks were doing pretty good holding. But yeah, overall, I think that that's why I'm looking at Qs. I'm looking at us to fill two gaps down here. 350. That's like $12 move for Qs. So the reason why I was even though I think we're coming up on the futures, I think that will give us an opportunity to get in for shorts. We have this gap fill from Thursday on Qs. We could push up, touch 368. Is there any fair value gaps that can help push us down? There's this one right here. So there's like a 30-minute fair value gap here that you could kind of look for. So we have a gap to fill at 368.58 on Qs. I'll be looking for actionable signals to push us down right here. So this I'll set an alert right here. Oops, set an alert right here. Okay.
Can you alert me too?
I'm always chatting with you. So look for red 2 downs. Okay, so once price gets up there, that's when I turn on my strat on the bigger time frame, and I look for red 2 ups. Look for red 2 ups, and I'll just cycle through or even this one right here. This is a red 2 down, but this is the type of candles that I want to see at the alert that I put. You see how we pushed up heavy? People are gonna think, hey, the trend is reversing, but it's not reversing until we make a new higher high. So I want to see us hit here. This is just internal liquidity that could be swept. We fill this gap. So right here, I'll be looking for shorts because on the bigger time frame, we got to come down. Same with Tesla too. I think Tesla looks pretty bad. Yeah, Tesla has.
I really want to catch a reversal on Tesla. So what do you think is going to happen with them?
What do you mean a reversal? Up or down?
I'm thinking back to the upside. I just don't think it's going to go fall back down.
Why not? We have this one last gap right here, and then like this one, which I don't think we're gonna get this low, but we have one that's close. That's like $7 away. The ATR is what, like $10. But I do think that we come up a little bit because look at how we're rejecting this 90 MA. We might come up right here and then push further down. So, but it all depends on what we're doing on futures in the morning. We're pushing up. This could be a 2-2 reversal, but I'm still bearish until right here. So let me try to find the comp for SPY. I guess for SPY it would have to be if we break and close above 452.89. I'm pretty bearish because this is a swing high once we broke the support right here. So if we can get back above, because we could take this out and still be lower than this. So yeah, that's the game plan going into tomorrow. So you guys learn anything on liquidity today?
Yeah, I learned some stuff. I think I just have to put it into practice. I have to just like aim for them. And I guess I'm not aiming for them.
What do you mean aiming for them?
Like, I just need to be more, cognizant of it. You know what I mean? Because like I am playing trend lines. I'm doing this, I'm doing that, but I'm not thinking, oh yeah, I'm taking out liquidity. Oh, this is a liquidity grab. This is a this. I'm not thinking of it in those terms.
Yeah. Well, trend line is liquidity.
Yeah, and see, that's the thing. I just didn't know, I didn't know it was like the equivalent, you know what I mean? So
Yeah. Equal highs, double tops is liquidity. The reason why, like, I like a double top that takes out liquidity. Like double top that takes out liquidity. There's times where you'll see like this and then this right here. For example, this and this. We never took this one out. I don't trust that as much as if I see this one and then a rejection. Because that's buy side liquidity taken out. So we look for sell side targets. But if this is not taken out, then I would have to get some confirmation, which would be like later on, like a trend line break to the upside with volume. And then you can enter off of a fair value gap at discount.
so what's the big thing for me is it's always the entry and exit. So I think that's what gets people. I don't not that gets people, that's what gets me, you know what I mean? Because I'm like, okay, I want to get like the best entry because sometimes you wait and then you move. When you don't wait, then you actually get the bad move. You know what I mean? So it's just like getting those additional confirmations to say, okay, hey, it broke the trend line, but then you have to wait for the break and retest and then to get in and then to make sure you have all those additional confluences.
Because I think what you're doing is just reacting to the candles. I think you gotta create like maybe a game plan, a watch list on if price hits here, then liquidity is taken out. If price is, breaking here, like for example, like right here, this is the support. So like I said, is that I want to see price react right here. So I'll set an alert for when price hits here, because either way, if it hits here, then that would be like, if you're looking for calls, that might be too late, but I'll be saying, okay, I'll be waiting for here for puts. So that's my game plan. If it doesn't hit here, then I won't trade it. Instead of saying, oh, we're moving up, I'm getting calls. We're moving down, we're getting puts, because you might be successful there, but then there's times where you get burned and then you can't really repeat that, I guess, that strategy other than just reacting, if that makes sense. So
no, that makes a lot of sense. I like
yeah,
that.
you said to create levels in a game plan. Like for example here, right, we have gap fill for Apple. Let me just delete these targets. Yeah, so I think Apple can be, let's see the daily candle, right? It's a green 2 down. A green 2 down is supposed to be bullish, right? So we could get a 2-2 reversal. So my game plan is if Apple clears 178.62 in the strat world, my target would be here, 180. So that's a $2 move on Apple with an ATR of $3. So that would be the game plan for me. We're at support. Apple's green 2 down. We swept liquidity all over here. So a break above 178. I'll be looking for any higher low to take us to this target. And if you don't really feel comfortable going all the way that high, then you go right here at the because there's 4 levels, 4 liquidity areas in every candle, right? So on the smaller time frame, it would probably look like this.
You have a fair value gap there too, right, BW?
On the daily, right here. Fair value gap. Yeah, we do have a fair value
Yeah.
gap, actually. Yeah, daily fair value gap right here to here. So that means that price can, right? We do a 2-2 reversal. We sweep liquidity right here and run into this fair value gap, and then we push down here. So that could be your game plan. I'm gonna get calls in the morning if we break 178, and then I'll be looking to take targets and then look for puts at 180, because 180 is also a psych level as well. So that would help, I guess, give you a little bit more confidence in your trading going forward. Or if we break support, which is basically a daily, you go to the smaller time frame, right? If we break, we have this close right here. This is the gap that we closed at. So if price opens up right here and we just rip through, then we have a trend line, which is liquidity that can, and if we break, if we take out liquidity and follow through, we have target at 175. So yeah, you can play both sides. You could just play, us breaking, because usually like on the highs and lows of the previous day, it usually leaves you with a midline, which is right here, 177.60. So if we get a strong push below, let's say 177.60, then you could be like, I'm looking for lower highs until we hit our target of 175. But we're at support. It's a critical level. We did sweep liquidity to the downside. This is the daily green two down. So we could have, and on the daily, which I mentioned on my on the channel. Let me see my channel. I mentioned this too. Apple daily trend line broken this week. This was the daily trend line. Bearish engulfing on Wednesday. RSI oversold. So I'll be careful for some type of consolidation. We're still in a downtrend, but we might need some consolidation just because RSI is down here. So yeah, that's the game plan, is that we might consolidate. We might push up to hit this level right here. I think that would be the higher probability for us to come up, sweep liquidity, and then go down and take out this gap fill. And if we really push down, we would go to 170. So you could just be patient, because either one, it gives you like a $3 to $5 moves, a $3 move up. You can get puts, but if you wait for the 180 rejection for a bigger, like an hourly or 45-minute red 2 up, or like this, something like this. This is a 2 up, red 2 up, and we swept liquidity right here. Then you could just wait for this. And then once we take out this low, you could just hold your position for a very long time, because the next liquidity is down here and then down here. Does that make sense? So the game plan is just don't enter anything at open. Don't enter anything at open this Monday. Sometimes you can do it, right? Like for example, right here, you can enter, no, not here. Well, yeah, right here, you can enter at open. Why? Because you can enter at open right here, because you can see we're already gapping up and we have resistance right here. So at open, yeah, we made a push straight to the resistance, and then that's when you scalp when you get out of your contracts. So there's times to be aggressive at open, there's times not to be. You can usually find out depending on how the if there's a trend line or something like this at open. But if there's not anything available, like I said, we're at support, and I would probably wait for 180 for hard puts that you could swing, or you could just play liquidity grab to the upside to 180. And that's where I want to chill out. 180.77 target specifically. Right there. Okay. All right. Let me if there's nothing else on liquidity, I'm gonna just end this recording, because I don't want it to be too long. But I hope this helps.